China said it was shocked after the US announced the fresh tariffs escalating a trade war between the two countries. The list names more than 6,000 items, including food products, minerals, and consumer goods such as handbags. The White House says the tariffs are a response to unfair trade practices by China. All right, well, that trade war affecting Africa on the ground, and of course we've been looking at how it plays out on the markets. So I can tell you today, the rand weakened again. Basically, as soon as these tensions escalate, as soon as there are any signs of this trade war escalating, investors move out of emerging markets like our own, seen as somewhat riskier. And we do have Razia Khan on the line. She's an African market specialist, an economist at Standard Chartered Bank, live for us from London. Razia, let's start with the rand. It seems so vulnerable to this trade war, isn't it?
Certainly. Well, what we do know of the rand is that global events always have a big impact on how it trades. It is a very frequently traded, very liquid emerging market currency, and in some ways it tends to reflect what risk appetite global risk sentiment is doing. So right now, what is front and center of the market's concern is the possibility of an intensifying global trade war. It's unsurprising that the rand has been impacted.
We've been having a debate here at home. You know, when the rand was rising, I think after December, we were thanking the new president. Now it's falling, we're blaming the globe. So is that opportunistic analysis, or is the global picture really buffeting the rand right now and affecting those earlier gains?
Well, we need to place things in context, and a lot of the rand's gains from late November last year, when we had the ratings downgrades, but South Africa did not lose its investment grade rating from all rating agencies, that proved to be the turnaround point. The further positivity was very much driven by domestic political change in South Africa, but this did coincide with the time when we went into 2018, when general sentiment around global prospects was robust. Risk appetite was strong, and with good reason. We had seen a broad-based recovery in many important economies. The U.S. economy was continuing to do well. China was doing well, and this fed into the positivity around the domestic South Africa story. It's very difficult to isolate one thing from another. We know that there has been growth disappointment, even though many would argue that the Q1 GDP numbers in South Africa were somewhat backward-looking. But what matters right now is global risk appetite. And given the extent of foreign investor participation in South Africa's financial markets still, global risk appetite will continue to be an important influence.
Okay, so this affects us directly, especially on the market. Where do you see it going? How bad is this trade war going to get?
What do we need to assess in the very near term? What has taken everyone by surprise has been the speed of deterioration. We saw the initial suggestion there was going to be the imposition of tariffs. We saw the tit-for-tat retaliation, China saying it was going to do things in response. And now it's the speed with which this is starting to impact sentiment. This is the big concern. It's still too early to call exactly which way this is going to go, and we do need to watch the reaction on both sides very closely. What we cannot do is isolate what is happening in the U.S. from the upcoming midterm elections, and a lot will be done, a lot will be pushed through ahead of that. Are we going to see anything lasting? Are we likely to see something with a lasting impact on the global economy? That will be the key driver of sentiment. We also need to remember that the potential disruption to global trade is only one of the shocks that emerging market economies face right now. So we are seeing a normalization of monetary policy that is taking place, and that brings with it some risks to emerging markets. We're seeing oil prices that are more supported, and alongside that, global trade tensions. For now, though, this is taking center stage.
Well, a poorer world generally affects our exports to the rest of the world and affects the ability of foreigners to come and invest here. Are we heading towards a poorer world?
Not necessarily. It is still too early to call that. And if we look at the underlying growth momentum, Standard Chartered is still forecasting 6.5% growth for China's economy this year. That is still a very robust rate of growth. Only today we've been looking much more closely at the tools available to China's policymakers in terms of being able to sustain that growth. We do need to watch these growing trade tensions, but we also need to keep the likely impact in perspective. What matters for South Africa is that we are seeing a continued global recovery for the moment. There is some threat. There are threats that need to be looked at, but there is still the expectation that the years ahead will bring better growth and hopefully deeper structural reforms as well. So for now, the message would be take whatever volatility is seen. That will hopefully only be short term, but we do need to keep monitoring these global risks as we go along.
Okay, Razia, you're making us all feel much better. Thank you very much. I'd love, before you go, to get your take on something. There's a debate here as well that maybe we as South Africa should have been, taken a leaf out of Donald Trump's book when we started out in 1994 and maybe protected our own industries with tariffs then. That's still an ongoing debate. And then conversely, do economies get to a point, maybe the US right now, where it's big enough, where it doesn't have to protect, where they don't have to look inward, and maybe that's why he should just leave well alone?
Well, here's a very interesting point. If we look at the rise in global prosperity in recent decades, if we look at rising living standards in emerging markets especially, that has been very closely tied into the growth in global trade. So would it have been the correct thing for South Africa to have become more protectionist in 1994? Could it have protected jobs? Or would it have just led to a growing degree of uncompetitiveness? There are two sides to this debate. The counterfactual is always very difficult to establish, but I think given the recognized relationship between greater openness, greater trade, more prosperity, that absolutely looks like the way South Africa should be going.
All right. Thank you. As always, Razia Khan from Standard Chartered Bank on the line for us from London.